Good afternoon, everybody. Hope everyone's doing wonderfully well. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and this is Trading the Close, and I've got a lot to discuss today. So number one, Jerome Powell testified today. Nothing new there. Market ignored it. All right, then we got the bond auction. Bond auction actually went off okay. That gave the market additional kind of rally mode to it, and we saw a melt up. And this is a pure crystal clear melt up in the markets at this point. So lots of upside in the short term. The question is where and when does it end? So we have a couple things. Number one, tomorrow CPI data, 8:30 a.m. Eastern time. That will be huge. I'll cover it on the game plan at 9 a.m. sharp. We'll be looking at what's moving in the markets. But we're going to see action in the dollar, in gold, in silver, basically across the board. And with the markets priced up here, you almost get the sense that the market is thinking it's going to be a better than expected number, a lower inflation number. If it comes in line or slightly worse, watch out. The markets could get a little panicky. Now listen, you'd think that Jerome Powell would already know, so he probably was in a position to say, okay, well, he would have given us a heads up in his testimony. But it is just something to keep an eye on, that you have to watch that CPI number. It will be a market-moving event. In fact, probably the biggest event of this entire week. All right, so let's flip over here to the markets and see what's going on. We'll go through this, and then we'll talk about what is going on in the individual stock realm and commodity as well as crypto realm. Dow up about 450 points. So the Dow is catching a bid. That is up 1.15%. The Nasdaq's up 195 points, or about 1% as well. S&P up 50 points, just under 1%. And oil trading up a little bit, getting a bounce after 3 down days in a row, up about 0.75%. Gold eking out 1/3% gain. And Bitcoin struggling. Now, Bitcoin was up earlier, got close to my $60,000 short-term target that couldn't quite get there, and now is coming back in. I would be a little concerned with Bitcoin's price action. This is a market that across the board, everything else is doing great. Bitcoin is struggling. What does that mean? We'll dive more into the chart in just a minute. Heat map wise, look at the green. Apple, Nvidia. This is again Magnificent 7 Central lifting the markets up. Granted, you do have other stocks that are participating today. The Russell is up a little bit today, which is 2,000 stocks, not including the Mag 7. But listen, when you have literally Nvidia, Apple, and Microsoft all up basically 1 to 2+%, that equates to almost 22% of the S&P 500 just in 3 stocks, and they're up 2.5%, 1.6%, 1.2% there. What is that doing? That's literally going to lift the markets just by itself when you have that concentration of market cap up well over 1%, even as much as 2.5%. So we have that type of market. Notice how there's a lot of green here with electronic technology on this. Green down here as well for technology services. And then you move over here and there is some green, but it's a lot more gray. Gray with a little red speckled in there, a little bit of green. This to me looks much more mixed. So it's a much more mixed kind of neutral upside, some downside. This is obviously much more green with the big players here. Google, Microsoft, Meta, Apple, Nvidia, and so on and so forth, all heavily green on the day as the melt up. This is a melt up that money just continues to flow into the market. And by the way, I want to just talk a little bit about this. So we talk about how it's a self-fulfilling prophecy for the mega caps to go up until it's not. What do I mean by that? Well, again, the bigger percentage of the Nasdaq and the S&P they become, the more money, as people put money into these ETFs that track those indices, more money goes into those names. So the more money goes in, the bigger they get. The bigger they get, the more money that gets put in goes into those individual names. What I mean by that is when you're talking about the Magnificent 7, you're basically now at 35% of the S&P 500. That means when someone puts $1, just $1 in the S&P ETF or any ETF that tracks the S&P, 35 cents of that dollar goes just into these 7 stocks or 6 stocks. All right, now the bigger they get, they suck up more and more money. Once, if they're at 40%, then it's 40 cents out of every dollar that goes into an S&P ETF goes into these names. Now, it's great while it works, but when it doesn't, watch out, folks, because when people start pulling money out of the S&P 500, guess what? 40 cents, 35 cents comes out of those stocks. They will drop fast, but that only will happen when fear arrives, and we have no fear. VIX confirms it. 12s in the 12s on the VIX tells you there's no fear out there whatsoever. Okay, So let's go to a couple other things here. I want to go to the charts here on an intraday basis. Here's your S&P chart today. It was just up, up, and away, basically, a slow, steady grind. By the way, volume is anemic. It is so thin. It's just kind of keeping the market buoyant. Again, when I see volume like this, I say to myself, number one, big institutions are not buying. Granted, they're not selling either. They're just letting the retail investor be the buy side, and then they have their computer programs making the market back and forth, trading for pennies here, pennies here. When you do that millions, billions of times a day, it adds up to be good money for them. But ultimately, the small investor continues to just leg in, FOMO in. You can see sideways here off of the gap up. Then the float began. Notice how the float began right around lunchtime. Lunchtime is when volume gets the lightest, right? So lunchtime, that's where the incline goes. Then kind of in the afternoon, you went more sideways here, right? See that sideways? And then what happens? Well, guess what? And this is so interesting. This is something I've learned many times the hard way in trading. But when you're a trader, and there's a lot of day traders out there, a lot of people day trading these days, what happens is they see the S&P up and they're like, I'm going to short the S&P because it'll drop at some point. So on the intraday, they start shorting. They short here, 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 right? And the market's not pulling back. It's not giving them a profit to exit the trade. And so what ends up happening is when you get to the very end of the day traders that are using 4-to-1 margin, they can't hold 4-to-1 overnight. In the US, you're only allowed 2-to-1. So they have to liquidate their shorts, which creates buy. Remember, when you cover a short, you have to actually buy the stock back, or in this case, the S&P 500. So what happens, all of a sudden in the last 30 minutes, these day traders that were trying to make money all day long shorting, they have to exit the position all at once right here, which causes that late day push up in the final 30 minutes. You see it so many times on markets, and it usually happens on markets that never give a pullback. Like this was basically sideways up and then sideways, and then there it is. Never did you get something like this, right? That's where the shorts want to see. They want to see that. They want to get out at that point. It didn't give them that opportunity. So just a 2 cents there, kind of an interesting thing. All right. Couple stocks here. In fact, let's go to the S&P. Look at this, guys. This is something I found today. It is a fascinating channel. Notice again that we are up into it, and I'm going to show you this. So this goes back to October of 2023. So basically the beginning of this latest bull run. Notice how the high end of the channel right along here, right along here, right along in this range here, all these kind of tags of it where it really couldn't break above. Then what happened? You got to break down, and you went below the channel. The channel broke. Now, interestingly enough, this zone right here was just where the Magnificent Seven started to rip higher, and the equal weight S&P actually started to go sideways and down. So it's interesting that you broke. This is right where it broke, where that divergence began, and then all of a sudden, the Mag 7 started to just carry the markets higher. All right, so interesting on that front, right? So what's interesting now is that if we look at this, look at how you broke, but then the Magnificent Seven picked up all the slack of all the other stocks that they just started to go higher. And look at how it came up, hit, and where are we now? We're hitting right there. Now listen, I'll be the first to say that until it's proven, meaning until we actually get a pullback in this market, I'm even skeptical, right? I mean, it's got to a point where it's gotten a little bit on the ridiculous side of how the market just grinds every day higher, higher, higher. But it doesn't mean as a technician I don't look at these levels and say, okay, let's watch and see. Because at some point something's going to trigger here and we're going to see some sort of drop, whether it's CPI tomorrow, whether it's PPI on Friday, whether it's something that happens next week, we don't know. But at some point reality has to come in, right? At some point buyers run out of capital. Okay, so that's something I was watching there on the S&P today. I did want to just touch base on Nvidia here, and then we'll get into some commodities and such. So Nvidia's pushing up today. It did push up today, closed at just below 135. Nice little day. I want to show you this. So look at this pattern formation. It is replicating the pattern formation that it basically put in back at the last time it corrected 21%. And I'm going to show you. So number one, you had a reversal candle right here. So this is by the way, this is the recent correction. Reversal candle and additional drop. You then got a bounce up right here, a retrace, but a higher low, low, higher low, and then a move up, and you kind of retraced into this zone. So remember this kind of W-ish type looking pattern here with a higher low right there. Now, let's go back a few months ago when Nvidia was much, much lower, in fact, and let's look at what happened back then. And what we see here it is. This is going back to March. And remember, in March, we actually had about a 21% corrective move. So what I wanted to show you here, and I'm going to try to zoom in on it so we can see it as clearly as possible. Look at this pattern formation. Reversal candle, down move confirming, bounce, pullback with a higher low, a move back up inside of this here, never took out the high there, here was a lower there, and then there's where you got your bigger drop, and that was from this high here to this low, it was 21% drop. So just interesting, and the reason why I bring up these replications, if you will, of past patterns is because the reason why technical analysis works is because you're not charting a company really. What you're charting is human behavior, right? So greed and fear work the same way. They work the same way today as they did yesterday, as they did a month ago, a year ago, 10 years ago, 100 years ago. Heck, you go back to ancient Egypt or ancient Greece, it was the same way. People were greedy, they were fearful, and there's areas in between. That's human psychology. That's why pattern formations tend to repeat over and over again, because it's not showing a pattern of a chart, it's showing how humans behave. And again, that is the key to why people should understand technical analysis. Okay, so just something to keep an eye on there on Nvidia as it retraces back up. I want to watch to see, do we take out the high or do we just roll over? Do we replicate that move from March? Next up, let's look at Bitcoin. Not much to talk about on Bitcoin other than it started out well this morning and lost its luster coming down here. Again, if I was an investor that was bullish on Bitcoin, I'd be a little bit concerned that it's not performing better in a market environment where, I mean, heck, everything seems to want to go up. Well, especially the Magnificent Seven. But even today, I mean, again, it was more of a broad-based rally. Granted, the mega caps still were the biggest percentage gainers, but it was much more of a broad-based rally. And Bitcoin not showing us that at all. In fact, it's still very close to its recent lows. So let's watch it. I still think it could get up to 61,000, 60,000 here. But then honestly, I would have to watch to see, does it start to break down again, especially if we do see some sort of stock market correction at some point. Gold today, small gain. Gold's going to be a big mover tomorrow on the CPI. Today it was just kind of a holding pattern. Again, it's above this level and it's just going like this. The question is it going to dip down to here or is it going to rip up to there? Those are your two levels to watch on gold for tomorrow. One's around 2,300 to 2,320. The other one's around 2430, 2440, right in that vicinity. I don't know if we'll get there tomorrow in one single day, but I do think tomorrow is the catalyst for either one of these moves to become reality down here or up here. Silver, same thing, not much to write about. You could say the same thing I just said about gold for silver. Won't waste your time on that. And then oil today did stage a little bit of a bounce. 3 down days in a row, got close to my little support line, small bounce there. Again, same thing, not much to write home about. And lastly, natural gas continuing to be under a little pressure, but still holding on to that minor support level right through here. A little bit of support, but notice how it's minor support, which means it's not a big catalyst for a bounce. And my guess is, or at least what I'm hoping I should say, is that it rolls over and I might get a buying opportunity at around $2.15, all right? So if you're in my commodity service, obviously you'll get those alerts if I take a position in natural gas. All right, guys. On that note, don't forget, we got Investor Empowerment Day coming up next Monday. I'll be trading in this very studio live for 2 hours in the morning, taking questions from you guys, talking to the live trading room. Be awesome. It should be an awesome event. Hopefully we have volatility so we get some trade setups and some trades in there. And then really at this point, guys, don't forget, tomorrow morning, CPI data, and obviously I'll be covering that in the game plan. Thanks so much for tuning in as always. I will talk to you tomorrow. Take care.